This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today's 1/20/2021 inauguration day. Markets are taking off like a bat out of you-know-where, and where they will wind up, well, that's why we've got Nick on the line with us now. Today this is show number 191. Hard to believe, Nick. We're going to be at 200 shows very shortly, but the biggest show in town. Hey, we got stimulus on the way, so life is good.
Yeah, it's going to be interesting to see how long the markets will embrace the incoming president. Right now, they seem to really be rejoicing that he is elected and everything is going through as promised. So it's going to be, it's going to be interesting to see how long this can last. He's expected to eventually raise taxes, both corporate and personal, reintroduce more regulations. You can remember when President Obama was in, they killed the coal industry. And also, he's going to spend another $1.9 trillion. That's the number that has been thrown out there. So we'll see how it plays out. But, again, 2 out of 3 are real negatives for the market. If you start to put in more regulations, that's a big hit to industry. And if you basically raise taxes, that's usually going to be a death knell. And then, the positive is the $1.9 trillion for the stock market. Ultimately, it's a horror show because our debt is already astronomical, and when interest rates continue, if they continue to climb, and they have been climbing, you have to pay that debt with interest, so that could be problematic.
Yeah, we got a lot of black clouds on the horizon, a lot of black swans circling, waiting for the exact opportune moment to strike. And if you had to say black swans on the horizon, what are you seeing? I mean, obviously, more regulation, more taxes, more debt. That's kind of that's a trifecta of bad economic news, but there's nothing different, Nick. We've been in this situation for quite a while. Maybe under Trump we had less regulation and less taxes, but we certainly had more debt.
Yeah, Trump piled on. If there's one thing I could say that is bad about Trump, was we piled on the debt tremendously, and that should, or at least that is expected to continue. But at some point in time, you have to pay the piper, and we're running now $27 trillion in debt. Soon will be $30 trillion. When does that trillion number become the real problem? And that's really, where we have to watch for. And the market will tell us that, because when the market turns down, it will turn down violently, and it'll tell you the party's over. But right now, the music is playing. The DJ's at the disco DJ booth, and he's spinning records right now. So let the party continue.
Hey, so we should go back to the origins of paying the piper, which has to do with the Pied Piper of Hamelin, and they had a plague of rats, and the Pied Piper offered to get rid of them for a sum of money. They accepted his offer, and then, of course, he got rid of the rats, and then they reneged. And there's a little bit of an analogy in there, isn't there?
Sure there is. The funny thing is, everything will work out if you pile on debt as long as you have growth, right? Ronald Reagan did the same thing. Ronald Reagan, supposedly known for the greatest economy before Trump came in with the greatest economy. But it really had to do with the Federal Reserve cutting rates. Rates are at 0 right now. There really isn't a whole lot to cut. Now, they could do other programs and things like that. Right now, they're buying corporate bonds. That's never been done before. So, the central bankers the president shouldn't get all the credit for the market booming. The central bankers should. But eventually, central bankers may run out of some creativity here. So, I just think the 1 year of the decade, as I've said before, is usually a very volatile year. If you go back and look at 2011, go back and look at 2001, that's respectively 10 and 20 years back, you'll see what happened in those decades. So I think we're going to see more of that. Right now, we're in a very, very, what we call the euphoria phase. And, markets are still going higher and they're climbing, and we'll ride that out as long as we can.
Hey, remember when Trump was elected, election eve, the gold price went up hundreds of dollars. I think the market was down like 800, the futures. And then all of a sudden it was like somebody turned the switch. And it's like, oh, wait a second. And then everything went up from that point on. And it kept going up till the pandemic, really.
Yeah, the election night in 2016, I believe that was quite something. As we saw the futures, tumble beyond anybody's imagination and then recover. And the next day, the markets reversed higher when they said, wow, this guy is pro-growth. We have just the opposite now. We have a guy that is not pro-growth. He's anti-growth. And, it's going to be funny to see how long the market embraces it. But right now, the market seems to be embracing everything in stride. And the rally continues. So it will be quite something.
Yes, it will. Hey, so we didn't talk about gold and silver yesterday. It wasn't a whole heck of a lot to talk about. It was up a bit, kind of like an average day's gain. But we've been in this one step forward, two steps back in precious metals. Today we're up nearly $30 on gold and half a buck on silver on the spot market. Just more of the same, huh?
Yeah, it's more backing and filling. Like I say, when we go down, people get too excited when the market declines in the precious metals. And when we rebound, they get too enthusiastic. Right now, we're still in the backing and filling phase. That's expected to last a bit longer. And, when I see the chart pattern tell me that, wow, this is it, we're going to make a big move, I'll let you guys know. But right now, I still think we're in the backing and filling phases. Today, good rebound for gold. Last week, we saw a big tumble for gold. So, it just continues to make that monthly chart consolidation pattern. And that's the pattern everybody should be focusing on.
Okay, so you need to be aware of head fakes, and you need to be aware of rallies that are kind of destined to go nowhere.
Yeah, pretty much. And we've seen that. Remember how excited I got so many emails from people that heard the show and are members of mine even when gold was rallying up on January 5th and 6th. Hey, Nick, this is the breakout. You're going to miss it. And then, we went all the way up to around 1952, and then we went down to 1800. So, I try not to get excited. I just try to use the charts and let the charts guide me. I've done very well in gold in my life, and I think we'll continue to do well. Just got to be patient. Sometimes you might miss a move here and there, but again, when you're looking for that bigger move, just want to use those big time frames and let those chart patterns develop.
Hey, so silver obviously got a floor of around $25 an ounce. 26 breaking it again. Is that going to be anything meaningful in the scheme of things, or it's just the part of the charts there?
Yeah, so the range in silver first of all is a bit stronger than the gold daily chart now. So people need to remember that. We've been saying that for a while on this program. So silver definitely is a bit stronger. The high end of the range for silver right now is still $28. So yeah, maybe silver futures are trading just around 26 or a little bit below 26 at the moment. But the high range for silver is around $28. I mean, that's a resistance zone. So, could we chop around here? Yeah, but it's all about the pattern that's made, and then I believe silver is going to be a powerhouse to the upside a bit down the road. Not yet, but I think it's showing better relative strength on the daily chart than gold. When that happens, it's usually talking to us that it's going to not only show leadership now, but show leadership in the future.
Yeah, and it's in this sideways channel, right? I mean,
yeah,
it got a little bit below 25 a few times, and then when it's done that, inexorably it moves back over 25. So 25 is pretty decent range right now.
Yeah, and in all fairness, I mean, if you just look at the bigger picture, we put a little high in just like gold did in silver in August, and then we've made some lower highs, and then we've gotten above a few of those pivot points. And when I see charts like that, I just know that the bigger picture is a bigger, longer term consolidation pattern, and that's why I flip over to the monthly and I keep an eye on that one. But I love everything silver's doing. I love everything that gold is doing. Just need to do more of it.
Yeah, just more of it, and just be patient, grasshoppers. The day is coming, and it's coming. When it does come, you're not going to need anyone to tell you that it's here. It's going to be very, very obvious, isn't it?
Yeah, I think it will be. And, again, don't rule out more corrections in the short term. That's certainly possible. But as long as the larger time frame holds formation, the trend is up there. I mean, that's really what it's about. So, again, I would be, if you're a long-term buyer of gold and silver, I'd be accumulating on big dip.
Yes, and certainly we've had our share of them for sure. In any event, go over, take a look at inthemoneystocks.com. You'll get Nick's long-term trading record, quite impressive. Take a look at the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz, and send us your emails with where you see gold, silver, the market heading. We'd love to hear from you. KL@KerryLutz.com. Nick, we'll talk to you tomorrow.
Sounds good, Kerry. Thank you.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.